Hello, everybody. Welcome to the Cafe of Knowledge. So glad everybody tuning in today. Like I've been saying for the past couple of weeks, this is Mardi Gras time for our city down here. You know, our Mardi Gras time is up to about 6 weeks. And yeah, that's a lot of partying and a lot of parades and everything like that. But due to the pandemic, we are not having it like it normally supposed to be due to the pandemic. So I just put up a couple of beads around here. Next year, hopefully, that everything will be back on point for Mardi Gras. But this is our Mardi Gras season, so that's why you see a lot of beads around, you know, all over the place. But anyway, glad y'all could tune in today. Please click like and subscribe. Please subscribe to our channel, please. You know that on Sundays, me and Jay, we do our show on community relations, and it's just fun. We have a good time. On Wednesdays, we do tutorial, where I teach finance, budgeting, inventory, accounting, things like that, so that to help people find a better career, move up in their career, have different job fields up under their belt. Okay, so anyway, now this week we are on chapter 15. Last week we did chapter 14. This week we are on chapter 15. And this week we talking about income statements, okay? And you know, last week we did the financial report. This week we're doing income statements. What it is it's just like the financial report. I gave everybody last week a list of what's supposed to be on a financial report. And whether you're a small business or a large business, you should be having a financial report. If you don't, you might want to think about doing that and look back into last week's video. But it's very important for every business, whether you're a small business, you're a barbershop, you're a hairstylist, hair salon, whatever. You have a small candy store, whatever. You have a small hot dog stand. It doesn't matter, you know, if you're selling hot dogs or you're doing things like that. Everyone, so that you can grow your business, should be doing a financial report and a financial summary report. And that was last week. This week is an income statement, okay? And it's another report, but this is what goes on your income statement report. I gave you everything you should have on a financial report. This week, I'm telling you and showing you things that you should have on an income statement report, okay? Now, first, income statement. This will tell the managers, the corporation, the executives in the business, and other people who has that management title and above. It tells, income statement tells all these people, management, executives, corporate managers, district managers, with all that. It tells these people how much, like, your company has made a profit, okay? If your company has made a profit or if your company had made a loss, okay? That's what it'll tell you. This will also give information about the company's revenue, its sales level, and how much money a company spent to make those sales, okay? So the income statement basically is letting everybody know in the business who are helping running the business, such as managers, executives, corporate, whatever. It lets all these people know the information about if that company made a profit or if that company made a loss, okay? So that's what the income statement really is all about. Income statement, you know, financial report, what we talked about last week, it has different type lines that you have to fill in and tell about your business. On this income statement, it basically only wants to know what was your profits and what was your loss. What did you spend What did you bring in? It's not a long, difficult sheet at all. And what it does is, let me tell y'all this. Some people call an income statement a P&L. So if you ever heard they say, what you got a P&L sheet? A P&L sheet is profit and loss sheet. That profit and loss sheet is really another name for income statement. Okay? Your income statement sheet or your income statement report, whatever you want to name it, but it goes income statement. Okay? And it'll tell you exactly the profits and the loss of that business. Okay? And it just give you a summary. It just give you a summary of their profit and their loss. So that's what it tells you also. It's a summary statement of the company's earning and summary statement of the company's operational results. So what it is if on the income statement, on that sheet, it will have profit and loss. You will tell if you made a profit and what all did you do good to make your company have a profit, and what all you gonna do that following year to make sure your profits stay increasing, okay, and not decreasing. Then on that income statement, if your company had a profit loss, means you lost more money this year than you did last year, then you're going to have to put down there your loss numbers and what are you going to do to improve that loss and what happened, the reason why you think that your company lost money this year. And that's why it's always good to have these financial reports and income statements, because it lets you know where your company stands. It lets you know where you are with your company. Are you profiting from your company, or are you losing profit in your company? Because if you losing profit, that's something that you need to fix immediately, right away. That's an urgent situation if you are declining in sales and declining in profit. So that's why you keep up with this paperwork, because it'll keep you from going under. Once you see that you're starting to decline, you can come up with some type of game plan so that you can increase the money, because nobody wants to be losing profit, okay? Because that means you just spending money and ain't making money, okay? And you can't continue a business like that, okay? So that's what an income statement does. It wants to know your profits. That's what should be on that sheet. Your profits, if you made any, how much profit you made, and then what did you do. You'll write a note to yourself. If that's your business or a corporation business, you would write, we increased this, we did this, we trained our employees more. That's why our profits probably went up. You do it like that. And you continue that, because whatever you was doing to bring them profits up, you want to keep doing it, because that means you're doing something right. But if you are declining in profits, that means something is going wrong, and you need to find out what it is so you can fix it, because you don't need to keep declining and losing profit, okay? So that's basically what an income statement is. That's what it wants to know. And it wants to know your sales or your revenue, okay? And that means it'll be a line on there that says sales or revenue. And that's how much money the business took in from its sales from customers. So how much you made in sales, that will go on that line, okay? And then it has a line that it should be cost of goods sold. What is the cost of the company to produce or purchase the goods it sold? So you know how you order stuff from your inventory, from your trucks, or whatever type of business you have, or whatever you buy for your store and use it, like if it's a hair salon or something like that, if you have to buy shampoo all the time, relaxer all the time, whatever, then how much money you spent that whole year, you need to put that on cost of goods sold, okay? So how much money you spent on all your inventory for that year, that's your cost of goods sold. Okay, so you have to put how much money you spent on everything you sold. Okay, and then it's another line that'll say expenses. How much the company spent on rent for the whole year, your administration, meaning your employees for the whole year. How much did you spend on advertising for that year? Did you have to stick up flyers everywhere? How much did it cost to to make all those flyers? To promote your business. You do have to add in your payroll, all that good stuff. Everything else that it takes to operate a business, that will be up under the expenses on that income statement report. Okay? Then it'll say net income loss. Net income or net loss. That's your profit that you made or the loss that the company took. Okay? So you will put that on the line. Okay? So just make sure that you know that, and it's really called, your profits and loss, excess of revenue over expensive. Excess over revenue over expenses. That's excess of revenue over expenses. This report means what the company earned as a profit. Okay? And then when it says excess of expenses over revenue, that means what the company lost. Okay, so you have one, excess of revenue over expenses. Then you have one, excess of expenses over revenue. And that's the lost one. Okay, so the first one is what the company profit. And the second one is what the company lost. Okay, in profits. Okay, so now that's how that go, and it just shows your income statement of cash flow. You'll have a line down there that says statement of cash flow. Okay, and that statement of cash flow is the actual cash the company has available for continuing operation the next year. So you're doing this report at the end of the year. Now you'll have to put on that line that says statement of cash flow, you'll have to put exactly how much money you have in the bank for that business account. How much money do you have in there? And you have to look at that number and see if you have enough money to operate coming up the following year. So if it took you one whole year and you spent $15,000 to operate your business last year, okay? It took you $15,000 to operate your business last year, okay? Now, at the end of this year, after you have done everything and you doing this paperwork and you setting it that 2 times, do your bank account have $15,000 in it for the business? Because you already know that last year, because you do these reports, last year it took your company $15,000 to run it. That's how much, after you calculated it, everything, how we've been saying on the financial report and on this income statement, once you see that, okay, because it has on there a line of how much did you spend all year to operate your business. Say that number was $15,000. Man, I had to spend $15,000 last year to operate my business. Okay, so then you need about $15,000 in the bank this year to start this year off to run your business. Because it took you $15,000 to run your business last year. So then this year, you need to have $15,000 in the bank to know that you can operate your business successfully for one more year because you got $15,000 in the business account. Okay? So that's how you do that. So that's what a statement of cash flow is. It just tells you that's the one line. Statement of cash flow. That one line is what you will put that it takes to run your business for that year that you're writing down for. So if it took you $15,000 to run your business this year, then you need to have at the end of the year, you need to have $15,000. You know it takes $15,000 to run your business each year. So at the end of the year, you need to be hoping and you want $15,000 in your bank account for that business. Because you know if you got $15,000, then you know you able to run your business for at least another year. Now, 15 and 15 is what? 30,000. So if you got $30,000 in your bank that year, then you know you got enough to operate your business now for 2 years. Okay? But that's how you know if you have enough money to operate your business. Because if it took you $15,000 to run your business for 1 year, then at the end of that year, you hoping that you have $15,000 in the bank account for that business. Because then that way you will know, okay, I got $15,000 in the bank. It took $15,000 to run this thing. I got $15,000 in the bank, so I know this business is good for at least a year to run it without going under. Okay? So I got enough money in the business account to run this business 1 more year. Okay? And then that's when that year, you know you got enough money to run it for that year, but while you're operating that whole year, you trying to bring in as much money as you can because you really want to double that money by the end of the next year. That way you know that your money can go, your business can run 2 more years without having to shut down or without going in financial jeopardy. Okay, so that's how that goes. So that's why it's so important to keep up with these financial reports and income statements, okay, because that's what it does. And that's why it's so important to keep up with it, because you want to make sure your business is good for 1 year, the next year, and like I said, if you come to the end of the year and you got $15,000 in there, and you know it takes $15,000 to run your business for 1 whole year, and you have $15,000 in that company's account at the end of the year, then you know you good to run your company that following year. If you got $30,000 in there, then you said, okay, my company good to run 2 years straight now. So that's the thing. You keep trying to bring enough money in that you have a safe net to know you got enough money to run your business all year long. And the only way you know that you have enough money to run your business all year long is if you keep up with these financial reports, these inventory reports we've been going through, and the income statement report that we're talking about, your income statement. The only way you're going to know if you are safe running your business each year, you have to keep up with these reports. And these reports will tell you if you have enough to run your money. You know, because if it say at the end of the year, you know it costs, you know you spent $15,000 to run your company. And at the end of the year, say you only have $7,000 in your bank account, then you know you just have enough money in that bank account to run your business for about 5 months. And then you hoping that within them 5 months, you can make enough to keep you going them other months. Well, see, then you working on the borderline because you might not make it, and now you're looking at a risk of your company because you don't have enough really to maintain your company. So that's why it's important to know these numbers so you can keep striving to make sure that you have these numbers. And say next year you look at your report and it took you $20,000 to run your company. Well, then, at the end of the year, you need $20,000 at least in the bank account, business bank account, because you know now you got $20,000. Okay, it took me $20,000 to run this company last year. I got $20,000 in the bank. Okay, at least I know this company can run one more year without having to close or go in bankruptcy or something like that. So that's why it's good to keep up with those numbers, okay? So that income statement is very short, and that's all you need to know about the the income statement report. And that's how that goes. So these reports are very, very important, and that's why I'm explaining it to you, because rather you use it in your small business or you using it in the corporate business or management business, you'll know how to do that and know how to track it and keep up with it and make sure that you have enough money every year to run your business without going bankruptcy and without having to close down or sell out. Like how you'll sell your business to someone else and then someone else will get your business and name it something that they want to name it or whatever. But that's what keep a business from going under. They keep up with these reports. And like I said, whether you are a small business or you just now starting to run your own business or small business, it doesn't matter. These financial reports that we talked about last week and this income statement we're talking about today are very, very important and a crucial matter to making your business be very successful. So that's all I have for today. Gain knowledge to prevent blockage. And we all know what that means. The more we know, the harder it is for anyone to block us from our goals and success. See y'all next week, and y'all have a nice week.